Hi, I'm Tony Kay. Welcome to Property Point. I'm joined by Nerida Conisby from REA.
Thanks for having me.
Thanks, Nerida. Good to have you here. Just wanted to talk about some of the trends in the market. I was reading that into Melbourne and Brisbane, there's a flow of investors out of Sydney. Is that going on?
Look, it certainly does seem to be the case. When we have a look at where people from Sydney are searching for new apartments, for example, the number one destination is Alexandria to the south of the Sydney CBD, but the number two destination is Melbourne CBD. So the fact that there's so much development taking place in Melbourne gives investors a lot of options, and people from Sydney are certainly taking advantage of that.
Yeah, and obviously the prices down in Melbourne are quite a bit cheaper than Sydney.
Absolutely. I mean, when we have a look at the most viewed apartment this year on our site, it was a two-bedroom apartment in Melbourne CBD for around $240,000. So that price, I mean, it wasn't a great apartment, but very, very cheap. If you have a look in Sydney, there's pretty much nothing you could buy at that price point.
So is this likely to be an ongoing trend as Chinese buyers are less prevalent in the market down here?
Yeah, look, Chinese buyers are starting to back off a little bit out of the market. When we have a look at people from China searching on our site, it has been fluctuating month to month. So some months have been up, other months have been down. Melbourne does remain the number one destination for them. Sydney is number two. We see twice as many searching in Melbourne than we see in Sydney. I don't think there's quite enough, if they do start to back off to a very large extent, I don't think there's quite enough local buyers to make up for them. But at the moment, it doesn't really look like they're dropping off in huge numbers.
Now, we're in the early part of spring. What are we seeing so far?
Yeah, look, I mean, listings will be up in spring. We always see listings increasing, so that's good news for buyers. We're certainly moving into a very different market this spring than we moved into last spring. I think when we moved into spring last year, we'd had two recent interest rate rises. Prices were rising very rapidly in Melbourne and Sydney. This spring, we haven't seen any interest rate cuts. We're actually seeing interest rates increase by the banks, and it's really starting to slow the market. So, good news if you're a buyer. It does look like things won't be so urgent to get into the market, but also for sellers too. We found last year a lot of upgraders weren't in the market, and as a result, we didn't see quite as many listings as normal.
So listings are a bit down across most of the major markets?
Listings, it does depend on your market. I mean, long-term listings are down, and a lot of it's to do with the fact that people in Australia are holding more property. 10, 20 years ago, the average person really aspired to own their family home. Now it does seem to be quite aspirational for people to own more than one property. So people are owning more property, they're owning them for longer. A lot of people have done very well with owning multiple properties. So longer term listings do seem to be on the decline. The times we see big jumps in listings is when there is very bad news. So the last time was GFC. People lost their jobs, people had to get out of the market very quickly, and listings jumped. So, for us, in terms of listing numbers, a stable market is probably the best outcome.
And in terms of actual prices, are there any trends there showing?
Look, price growth does seem to be slowing across the board. I mean, we certainly saw, those 10 to 15% jumps in Melbourne and Sydney occurring, I think, up until about May, June for the year, but those monthly increases now have been far more moderate. When we have a look on our site, we're still seeing very good demand in Melbourne and Sydney for houses, but we are starting to see demand for apartments decline. So, what that means to price growth remains to be seen, but it does show that I think a lot of investors are now out of the market, and because perhaps they're finding it difficult to get finance or whatever reason. Yeah. And as a result, there's less demand particularly for new stock.
There was some consumer confidence data out, which one of the lines was whether people felt that prices were going to keep going up or hold. There's still a majority of people believe that the market's going to keep moving ahead.
Look, that certainly seems to be the case from what we're seeing with our data on our site. I mean, there's nothing to suggest that the market's going to go backwards. Demand is still at record levels. It's jumping up and down month to month. It's still remaining very high. Again, the times that we see big drops in demand is when people lose their jobs or when interest rates rise very rapidly. Right now, neither of those seem to be occurring, and that means price growth may not be as strong as it was last year, but it'll probably still continue.
Oh, thanks very much, Nerida. Thanks for coming in.
Thanks for having me.
Join us again next time on Property Point.
Did you know that your membership gives you access to InvestSMART, Intelligent Investor and Eureka Report? Just use your original login details on all 3 sites or go straight to investsmart.com.au where you'll find all of our content no matter where it's published first.